We at OuhSnap are constantly thinking about possible blog posts to write in order to help you and to be a source of guidance for young travelers, photographers, and entrepreneurs in general. It doesn't matter if you're just playing with the thought of becoming independent, have already started running your business, or if you make 8 figures a year. Money management is something we all have to pay attention to. If you're making a good amount of money through your job, business, or investments, you may face different problems and thoughts about money than someone who's earning a modest income as a student, for example. However, for each and every one, the two main questions about money should be the same. First, how much money do I really need to live the life I want to pursue? And second, how can I make my money work for me instead of the other way around, so that I can enjoy a lot of free time? In my opinion, there's nothing wrong with talking about money and your income, since every human life sort of depends on it in one way or another. We all struggle sometimes on our personal paths through this thing called life. Why not help each other and share experiences? I saw a video on YouTube where 100 people were asked how much money they make in a year, and it became clear that a lot of people are not open to talk about money, which is not helpful at all. We have to overcome this mental block and educate our children and friends about money, because the news and schools fail to do so, as mentioned earlier. By remaining silent, we create a vicious cycle in which the younger generation takes over bad spending habits from society while not being educated enough about this complex topic. I see so many young adults paying off loans they got in order to purchase their first dream car. As a result, they have less money each month to spend on important things like groceries, rent, friends, and insurance. Driving a Mercedes AMG but not being able to pay for the burger in your favorite restaurant doesn't look cool, and that's the reason they bought the car in the first place. Probably. Most of the time they see their companions driving fancy cars and they have a huge urge to compete with that, which is total nonsense. You can, by the way, read our blog post about becoming the best version of yourself. There are a lot of helpful tips in there as well. I will link it down in the description below. People are being pushed by society into thinking they need to purchase the newest phone or car and have the fanciest clothing. This is a fundamentally wrong thought, since most of the materialistic things you own don't add any value to your life and don't make you happier in the long run. Actually, the opposite is the case. By noticing that you are in debt and that the things you bought aren't perfect after all, you become even less happy than before and the cycle continues. So as you can see, maybe you should hold back on making your first car purchase a big one. People will see your Audi and think, oh cool, good for him, and then continue worrying about if their new clothes look cool on them. On the other hand, if your ultimate goal is to drive an Audi and you finally can afford to buy one, there's nothing wrong with that, because it will create a lasting happiness in your life. Cars are probably your passion, and buying a new one fulfills you, and that's great. Now, without further ado, let's jump into the top 5 money rules. Number 1. Control your expenses and income. The first thing I want you to do is write down how much money you spend and earn in a month. Make sure you note the date and the reason you spent X amount of money. After 1 month, you have a good overview of your money management and you can now adjust your expenses. Do you really need that magazine subscription if you don't read it? Are you sure you couldn't have bought a used lamp from eBay? Now, I'm not saying to cut back everything, especially not if it brings joy to your life. There are a lot of other strategies as well that enable you to live life without worrying about money all the time. It's just a good starting point to overthink your whole cash flow and see where you may be able to adjust your spending habits. Rule number 2. Start applying the 5x rule on your purchases and also consider not buying it. The 5x rule basically says that if you cannot afford to buy insert your desired product 5 times, you cannot afford to buy it 1 time. This leaves you with a comfortable buffer after you've made a purchase. Another tactic would be just to wait 1 to 2 weeks without the purchase once you decided you want something. Waited a short time span will truly show how much you need the product. If you forgot about it or were still living comfortably without it, reconsider your desire to purchase it in the first place. On the other hand, if you were thinking about it all day, you can go ahead and buy it because, I don't know, you've earned it. Most money transactions on the internet are impulse purchases. You see something pop up on Facebook with a lot of likes and comments and decide you need it as well. You click the link and get more and more convinced of the product by the description and reviews, so you go ahead and buy it. With the tactic of waiting a couple of days, you won't have that problem and can reconsider your potential purchase. Today's advertisements lead you down a specific funnel that is tested and perfected over a few years, so you slide down the slippery slide into the purchase. And believe me, I'm talking out of experience here because we basically do nothing else but build those funnels. You have to be cautious when something is advertised to you, since it's really hard to differentiate between entertaining videos and advertisements in your Instagram feed. This is called native content and very effective in online marketing. Rule number 3. Ask yourself, does this product or service add value to my life? Minimalism is becoming more and more popular these days, and I'm not just talking about photography or apparel. Minimalism in general can also be applied to a lot of aspects in your life. To get into this lifestyle, I would recommend you watch the documentary Minimalism on Netflix and search for Matt Diavella on YouTube. He's a really funny guy that started off as a freelance photographer, and I'm sure you would enjoy his content. Minimalism basically states that you should only have materialistic things that add actual value to life. This of course doesn't mean that you should get rid of everything you own so that you are left with just 3 shirts, a toothbrush and your mattress maybe. But if you are into collecting statues or keep a ton of photos, books full of memories, then definitely keep that. Just make sure that you evaluate your belongings and determine whether they are adding value to life or not. Minimalism is a conscious lifestyle and not a term that you would put on your business card. It's about being content with the things you own and not seeking compensation in random material belongings or purchases. This thought process is even more important if you start buying random stuff with the money you loaned from a bank. This will put you in a constant pressure to pay off your loan and will eat a lot of your monthly paychecks. That's why you should be extremely cautious with the way you use your credit card if you own one. Rule number 4. Invest your money so that you can start generating a passive income. This one is crucial when planning your future, because your 401k will not allow a lavish lifestyle, or even any lifestyle in some cases, after your retirement. If you want to become truly independent from the government, except taxes of course, start investing in stocks, commodities or real estate. Even better, in all of those. If you start early to invest parts of your monthly earnings in an ETF, in exchange traded fund, or mutual fund, which are relatively safe bets, then you will have no worries once retirement approaches. Even Warren Buffett, famous investor and owner of Berkshire Hathaway, stated that the average Joe, if you want to say so, should invest in an ETF because it's the safest bet they can do. ETFs are a collection of securities, such as stocks, that track an underlying index. Because there are multiple assets within an ETF, they can be a popular choice for diversification. For example, you can invest in the Dow Jones Industrial Average, which consists of the 30 biggest businesses in the United States. And if, let's say, Amazon has a bad day and its stock price falls by, let's say, 20%, which would be a ridiculously bad day for them, then the industrial average can still perform good because other companies work and therefore perform independently. This would be of course only the case if Amazon itself has an underlying issue and not the whole economy, because then even the ETF would go down a little but eventually go back up, because the economy as we know it and as history shows will always come back up no matter what. You should know, however, that investing always brings a certain risk with it, and we are in no way a financial advisor or someone to tell you where to invest. You have to make up your own mind and do a lot of research beforehand, or ask a good financial advisor in your town. Prepare some questions to ask your advisor to see if he will really act in the best way possible for you, because some people just want the profit and tell you whatever's good for them. A question to ask could be, how long have you been investing and what does your portfolio look like currently? And by the way, a portfolio is basically a summary of all your investments in all the different areas. A job alone won't make you rich. The same goes for investing in ETFs and mutual funds, since they often mirror the average market share, which is something around 6 to 8% annually. If you're looking for financial security or even freedom, start investing in real estate. Most millionaires have their money in real estate in lucrative areas around the globe, since it pays them a monthly rent from a tenant and they can hire people to look after the accommodations. You just have to make a big investment upfront and should definitely do research before doing so. I would say investing in real estate is even a bit more complicated than investing in stocks. You have to have a really profound knowledge about property investing and what to look for, what to ask the real estate agent, and how to manage the cash flow of the property. And these are just some factors of a lot of more. There is so much to go through when investing in a property. You have to really make time and do your research. One way to start investing early in real estate is to get a loan from the bank, for example, and buy an apartment in a good area. This is of course easier said than done, but in theory this is possible. Then you let the tenant pay off the loan with the rent you collect, and after a few years you are making consistent profits. There are a ton of ways to buy houses and apartments, so you should educate yourself in that field by reading a lot of books or browsing the internet or asking people who have done so. You can also read the book Rich Dad Poor Dad by Robert Kiyosaki. He made millions and millions with real estate and property management. Other areas of investment that are really popular or growing really quickly are day trading, investing in startups, and online currencies. And there are even dozens or even hundreds of other ways to invest your money that I won't cover in here because it would get way too long. The best investment you can do is in yourself, and that is done by online courses, books, and educational videos maybe. If you want us to talk more about investing in topics like these, please let us know and we will deliver it to you. For now, let's move on with the video and get to the last point. Number 5, don't save on the wrong ends. This whole blog post up until now was basically about living below your means and investing smartly so that you can reap the rewards sooner or later. However, this doesn't mean that you should rob yourself of all fun and happiness in life. Life is meant to be enjoyed, and your number one priority should be to be happy with your current situation and yourself. More of that is covered on our blog post, again linked in the description below, guys. If happiness for you consists of buying the latest Gucci handbags, then go ahead and purchase them if you have the money. Everybody is different and everyone has the right to live their kind of lifestyle. Because at the end of the day, a lot of fun activities cost money, activities like playing sports, partying, or traveling. How much and where you spend your money is completely up to you. We just want you to be mindful and know that you should be responsible for your income and savings, and we are trying to do our best to help you achieve that. And that's basically it. Again, we are not pretending to be financial advisors or some sorts of know-alls. There are probably a lot of readers out there that know more about money than we do, and that's great. We are just trying to be peers, and we don't want you to sleepwalk through life. I sincerely hope you learned something new today and that we can help you with your situation. And if you liked the video, found it helpful in any way, please leave a thumbs up, subscribe if you want to, and I'll see you guys on the next one.